Hello, hello, everyone. Thank you very much for coming here. We're going to try to keep this panel as entertaining as possible. I mean, given that we're going to talk about a subject that could be seen as very boring to a lot of people, so please bear with us. We're going to try to make it as good as possible again. And again, something that is good about this panel, I can just say simply before everybody introduces themselves, is that we're lucky to have actual industry experts in this. It's not like a bunch of people with a lot of followers and stuff like that. Those are people actually like subject matter experts. So yeah, my name is Claude. I run a company called Mimo Capital. We tokenize RWA, but today I'm going to be the moderator of this panel and let my panelists enjoy the nice conversation.
Sorry for the technology problem. Hi, everyone. My name is Adam. I'm the CEO and founder of Rogo Group. So we originally from Canada and headquartered in Toronto. Our business is mainly running a compliant fiat crypto exchange based out of Canada, Australia, and the United States. And we also run crypto asset management business also on a compliant way as well. And we have recently looked into the RWA and trying to set up a new business there. So glad to talk.
Hi. Hey, Ben, co-founder of Anzen. We're based in the US. We do private credit investment, tokenized credit, and lending as well.
Hi, everyone. I'm Tony. I'm the CEO and founder of Inc. Finance. We build financial governance and financial management infrastructure. And we also have a commercial company that uses the infrastructure to focus on the origination of real-world assets out of Hong Kong.
Hi, my name is Yun. I'm the co-founder of Alicia. Alicia is the largest RWA issuer in Korea. We've been doing it since 2018, back when it was called STOs. Glad to be here and looking forward.
All right, great. So given the context, I mean, you know, in the last months, we had like a price hike, mostly of Bitcoin, and then quite a few other assets. And there has been a resounding sound in the crypto community that everything around RWA would kind of become obsolete. Like the yield of everything we see in the world of RWA might not really be interesting for people anymore if we're getting out of a bear market. And I mean, given that, well, we have a panel where everybody is like heavily invested in RWA, I wanted to ask you guys, like, what's your view on that? Like, if anybody wants to just take a stab at the question, like, are RWA going to survive a bull run? And are we in a bull run?
Okay, Ben, go ahead.
Yeah. I mean, I think RWA will survive. In my view, if you think about it as a complementary asset versus a substitute asset, right? You have the interest rates going up, and which is good for RWA. But if it goes down or if there's bull run, then it makes sense people would move capital into these higher risk assets. But in general, you want to diversify your portfolio. There's still a space for more stable assets, lower risk or medium risk assets. In that context, I think it's still a very important foundational asset to attract capital into DeFi ecosystem as a whole.
That makes a lot of sense. I mean, when you look at it from a perspective of the previous run, there has been more stable coins in the bull run than in the previous bear market, which means that there's new capital. It's not only flowing into BTC. It will always flow in other things. And if real-world asset can provide something superior to just stable coins, then yeah, hopefully there could be growth.
All right, I think I want to add to this to say this is a supplementary type of asset class. Now think about the consumer side of the thing, right? So we all know there are lots of creators who actually monetize their brand by building this strong relationship with the followers, the fans. So if you think about what the fans are getting, they're getting nothing. So one of the most powerful way of saying that what if these creators have branded themselves, created these IPs, and these IPs should feed back, the value of these IPs should be fed back to their fans or followers So in that sense, to say there's a crypto bull market, I would say it's even more supportive because the consumer side of the smaller fans and all that will embrace this movement to say, now I'm not only a watcher, I can earn by being a supporter, right? So if you think about it, there could be crowdfunding in that sense, but if you crowdfund, what are you getting back? That would be some kind of a real world avenue that is attached to that IP or to that brand. All that stuff can be tokenized, whether in the debt form or pure, more like a revenue stream type of token. So yeah, in bull market, there will be different plays for RWA as opposed to just a rates arbitrage.
Well, this is the thing. This touches something that is pretty key, in my opinion, on the topic. Like the whole RWA market so far is a little bit of private credit, but by and large, mostly money market funds and T-bills. And it has kind of this composition at the moment. But what you're suggesting here, Tony, is that we could go beyond T-bills. Like, what do you guys think would be beyond T-bills? Do you think there's any hope for RWA beyond T-bills? Because we've seen real estate before that didn't really work so far. And maybe it could. I mean, like maybe somebody would have an opinion on that. And then, like, what will be beyond T-bills? And is there any need to go beyond T-bills in RWA?
You want to take a crack at this?
Does it still doesn't work? It should work now.
Yeah, so I think, yeah, magic hand. So I just think for the RWA, right? So I think this is the only vehicle that's going to attract, the traditional finance guys and institutions moving their money into, because people have been looking for a solution that has underlying values, can generate cash flows for a long time. So I think personally, like as you said, real estate has not been successful in the past. However, just in Canada, for example, so the reason why it has been successful is initially the way people think is trying to attract retail people to putting money into RWA, which is entirely wrong. Because for crypto native people, they're not going to invest in RWA. The return is too low, right? It's not attractive, it's not sexy enough. So think about who would actually put millions of dollars into RWA and providing liquidity. It's institutions. So in Canada, I have seen 2 companies already, including us, where we are trying to work that. It has clear regulatory oversight under the Security Commission's guidelines, and they have clear standard, KYC embedded in tokens, and they have great properties for the commercial properties and industrial properties. And people are not actually lacking investors. All they need to do is to figure out a solution that can be standardized and can be vetted. There's no huge risks inside it. Then the investor will be pension fund, family offices. So they're going to pull each one more than $10 million each one into it. And then the initial liquidity would be coming from the institutional investors looking for trading that. And then once the liquidity is built, then it will be a perfect vehicle for the retail investor to come in. Because the retail investor itself cannot provide the liquidity people need. You're not going to buy something, have to pay a slippage for more than 5%.
This is something, in just to go back on what you're mentioning, if you have institutional investors that would be interested in buying tokenized real estate in this case, it does need a certain level of protection. Like, how do you ensure that the house is not being sold on the market while the tokens are around? How do you ensure the redeemability? Like, is the legal framework in Canada ready for this?
Yeah, it has taken more than a couple of years. Right now, in terms of primary issuance, vetting ownerships, secondary trading, each one has its clear guidance. And the only thing now needed is to get to the first, the property at scale to be accepted by the big institutions. And I think right now we're at a stage of, not conceptualize it, it's putting it into real use and to be accepted by the institutional investors particularly.
That's interesting. It's, this is something we can definitely learn from. Sorry, I thought you were about to talk right before he took the mic.
Oh, no.
No, okay, no worries. I think there's another category of product that could be ripe for reward assets again. Like it's because as you were mentioning a little bit earlier, a lot of people, crypto natives, would not necessarily be interested in RWA because of the low yield. But the thing is, in my personal opinion, again, it doesn't need to be low yield because okay, T-bills have low yields. It's 5%, and that's it. I mean, at small scale, it's still it feels very low, but you could have, I mean, you could tokenize hedge funds, for example. You could tokenize like a company stock. It's still an RWA. You could have insane returns. I mean, tokenize an AI company tomorrow, and what is it to say that it's going to have a low return? And this is what I think the strongest misconception about RWA is that people are still seeing a very limited version of what it could be, as opposed to seeing as really a blanket door for everything. So a question I would like to ask, again, following up on, we've seen that the industry was only T-bills and all that so far, but we've seen a form of a plateau. There was a lot of growth during the summer, like beginning of summer, and around July, August, it started to stop growing. Like the biggest players stopped adding TVL and everything. Do you guys have any idea why?
From an RWA issuer standpoint, I think there's an increase in regulatory issues. I think that's the biggest problem. A lot of jurisdictions are breaking down and re-evaluating the underlying assets, especially in line with the FTX collapse and a bunch of defaults that we experienced. For Korea, for example, Korea recently just published a guideline from the Financial Securities Commission, and they have now introduced guidelines and tax guidelines regarding the issuance of RWAs in the form of security offerings. And once the government speaks, unlike that, a lot of the issuers like ourselves are hesitant to provide further services for both the suppliers and the depositors that we have in our lending protocol. So that's the biggest reason, I think.
So in your opinion, it's more of a supply problem than a demand problem. You feel that the demand is still here, but the supply side is kind of limiting itself?
Yeah, so supply, there's plenty of supply right now. There's so many asset owners that are willing to tokenize for various reasons. I think the traditional market right now is really hard to secure liquidity. So I think that's the biggest reason why. Another is that there's been a lot of credit defaults, and I think asset owners are looking for private and secondary markets to see how they can utilize their traditional assets. Yeah, and if you want to.
Yeah, I actually want to add to that. I actually agree with you. Is that when you look at the quote-unquote RWA, you think about T-bills and stuff like that. To a larger extent, corporate bonds or stocks, right? They are already securitized. They're securities. This RWA, in the financial jargon, you're re-securitizing them. You aren't really originating anything. So by definition, the regulatory pressure will be there. To be very honest, why are you not buying a T-bill in your brokerage account? Why are you buying the T-bill in crypto? In itself, there is a compliance issue there. Can T-bill be sold to anyone who has money, right? So if you rule out that class, the next one will be these non-standard financial thing, like a private funds share or a private loan. So that has less pressure, in my opinion, right? So two parties can originate in the private security transaction. That definitely will have less pressure, but you still have to pass that potential hurdle. There is a scaling problem from the supply side of the business. And that's when everybody becomes compliance or regulatory aware, that thing tapers off, right? So you have a boost, then when you have everyone and their mother starting to originate treasuries, you know that is not going to work, right?
Now that's an interesting point of view. Again, like the term is broad enough that we can look at things that are already securities, things that are not securities, and look at how tokenization either increases the availability in the market and stuff like that. What we can see is that bringing essentially even like pure securities on chain, given the quality of the tools that you have today, could lead to interesting uses, like using some T-bills as collateral on a lending platform to borrow something would be like allowing you to leverage in a way that will be very difficult with a bank or something like that. Like there's a lot of uses that we could foresee happening with a larger adoption, but it's not there yet. And hopefully we'll see that with other categories of asset, like you were mentioning a little bit earlier. You were talking like a portfolio diversification earlier, like on the possibility of RWA to grow within a bigger bull market. Which type of assets do you picture people would go for in a diversified portfolio, like from an RWA standpoint?
Yeah, I think.
Oh yeah, you go.
Well, I think it would be moving up the risk curve. So instead of just a pure risk-free 5%, it may be corporate bonds. It may also be other things that aren't invented yet. So there's been people doing securitizing, streams or doing minor revenue, future royalties on these types of things. These are all things that are higher risk. It's still a form of RWA that provides a higher return.
Right. I think just like RWA provides a lot of things that crypto just doesn't provide. So for the investors looking for crypto exposures, they know what to do. They have a lot of ways to play. But for the RWA, is a lot of assets that have underlying values, cash flows, right? So this is an entire different world. So what I'm thinking RWA can be big on a global stage is when it can revolutionize how, I'm hesitant to say that word, but it's trading securities 7/24, or trading, the most part will be security, but maybe some of them not. But like I'm trying to not make the line here, but actually
you're not going to make a lot of friends saying that.
I think 7/24, the trading platform for a great product, which for a lot of institutions and people understanding where the value comes from, less imagination obviously compared to crypto, but a lot of things you can touch. So I think this is where people make money, even in the crypto world. They think, okay, other than money put in stablecoin, DeFi, where should I put? And this is a great place. And then for the people from the traditional world, from the TradFi, they say, okay, I want to put money through my bank account to here because I know none of them will go to zero tomorrow. So I think all these kind of safety, value creation, sustainability, and governance structure, once ready, there will be massive adoptions.
Yeah, crypto brings more than just the volatility, right? It can bring the right to self-custody, the ability to have like equivalent of a bank account with a bank account and all that. RWA just like adds a new asset class to what you can do with your crypto, essentially, which is interesting. As Ben was saying, like going higher the risk curve. I'm actually a strong believer in that. We're currently tokenizing Bitcoin mines, and if in the whole concept of reducing friction to something, mining, especially mining Bitcoin, actually has quite a bit of friction. It sounds easy. You should be able to plug your computer and mine, but nobody can do that now. It's all ASICs, it's all stuff. It's all heavily professionalized. But financing a Bitcoin mining operation and tokenizing the financing, or tokenizing the Bitcoin mine itself, could lead to an extremely high-risk asset that could have very nice yield and could be interesting in the middle of a bull run. And that's just one example. There could be a lot of things where you don't have to abandon the concept of high volatility, high risk, and still use RWA. There has been this false dichotomy, in my opinion, of RWA is just a no-risk asset class versus volatile assets like Bitcoin and ETH and everything else that is high risk. It doesn't need to be.
Yeah, I'd also like to add, RWAs, you can, tokenize other things, including, tangible assets and commodities. When you look at our DAO forum, it's interesting because even though we started with real estate, we get a lot of requests from assets owners who want to tokenize, their Ferrari F40 or, their wine collection. So it's interesting to see. And I think the way we see it to move forward, we see it kind of as a vehicle to trade, assets, peer-to-peer assets in a peer-to-peer fashion, and kind of bring up that, bartering age back again, where people can, bring their assets in value on chain, online, and trade it with, other peers.
This is what you're bringing, essentially tokenizing luxury items has been brought in 2017 like a potential revolution when Ethereum came. There's people who goes like, "Whoa, we're going to tokenize everything and all that," but it didn't really happen. Do you see a reason why it could happen today? Like a reason why, like what's more ready? Is it because we have more capital in the industry, or is it because the regulatory frameworks are more ready? Why would these type of items, like outside of the TBL category and all that, like why would say luxury items work today?
I think it is more ready now than then, simply because the blockchain technology, the infrastructure is a lot more mature now. For instance, a lot of people talk about DAOs. I mean, 2 years ago, right? Few people thought about what a DAO can be used for. If you think of a DAO as a small underwriting group that pulls many freelancer professionals, and as long as they expose their expertise on chain. And these can be very easily be thought of the traditional investment banking syndicate groups. So on one hand, you have this DeFi facility, which is already there. If you could underwrite something that issue it, the trading is already there. You don't need, back in 2017, you were talking about STO exchanges. Back then, you didn't have this ubiquitous transaction layer of facilities out there. Today, if you could successfully underwrite this and issue it, you almost don't ever need to worry about. So whatever swap, a kimchi, you pick one. So there's a crowd, there are 5,000 people who like this asset, $5 million, you guys can stay here to trade. So I think that is a fundamental change from infrastructure's level. There's so many DAO tools have built to support the DAO governance, to support their finance, their treasury, their transparency operation. I think that could be a sort of a wholesale level of a change. We don't need STO exchanges anymore. So that's my point of view.
That's a very good point. I mean, as a DeFi person, I do believe that DeFi was the revolution that enables that. So I happen to agree very much with what you just said. Just like it brings me to something pretty interesting. Like you see, with the interest rate raising, we have seen essentially explosion of T-bills in the market, which makes a lot of sense. But we have also seen in the traditional world, VCs slowing down at deploying capital in anything modulo AI, right? Like if you're not in AI, there's no capital deploy and stuff like that. So we've seen, something that could be called a Series B crunch, like companies that become profitable, that have nice businesses, but that can't raise. Do you perceive that RWAs could be an interesting way to have markets and avenues for this type of assets, essentially for these companies to raise credit there, or even sell stock directly? Because now that we have essentially those DAO tools and everything, do you think that it would enable this type of category of assets there?
Yeah, I think on the DAO side, obviously you are more professional than I do. I'm probably not going to even compete with that. So I think RWA capital raising should really come from the TriFab people, to my eyes, because those people have a lot of pain points they want to resolve. So they told me many times what are the issues they're seeing, and when I bring them the tokenized solutions in a proper governance, they think it's fantastic. They couldn't even believe this exists. So these people now start to think about, okay, in the digital era, and to their eyes, let me put it clear, they don't want to hear us as crypto assets. They don't love this word. They want to say it's digital assets. So digital assets in general is a broader concept, which also includes crypto and RWA and a few others, NFT stuff, right? So I think the people in the TradFi are looking very carefully about RWA within the digital assets regime, and they're willing to deploy capitals, even with their own capital. They don't even need to raise it. So they can do within their own company with a pilot project to do it. And if it's successful, they can easily reproduce that. So I think that we'll definitely see that in the next 1 to 2 years. And that volume will bring a lot of attention. And then hopefully on the DAO side, on the on-chain side, there also will be a lot more traction there too.
The question I would have for you in this case, if you picture that there could be this type of traction and everything, is how do you believe these regulatory, these institutional investors will deal with the fact that essentially people, most on-chain users have not passed KYC, do you believe that there will be okay trading in a curve pool where essentially, I mean, it's just the question, right? Do you believe that it could be an explosion for permission blockchains, or do you believe that it will trade on the on public chains? Because the reason why I'm asking this is that you made a strong difference between digital assets and crypto assets. If they don't want to hear about crypto assets but are okay with digital assets, in general, the difference could be the permissionless nature of it, of crypto assets, or the fact that it comes 24/7 and it's like a somewhat on a decentralized ledger. What do you think would happen? Like, do you think they would be okay with the concept of a public chain where those assets can move, or do you think they would need private chains and essentially a different category?
Yeah, I'm sorry, because I'm on the infra side. This is the thing I think we spent the past 3 years of building. So what I believe is that to have a private chain is sort of a fake theme. Why can't you use a permissionless network to build your permission-based clubs if you want? So let us say you have an auditing firm, you have a licensed digital manager, you have some kind of account. You have all these people expose their credibility and the license if you want. They expose these things on a permissionless infrastructure. They literally have created a virtual private organization. Why go through a private physical network? So that's what I think you can solve these issues, and we have made quite some inroad. What we did is that we turned the table around. I think there could be a useful use case, is that the asset originators need to be very careful. You don't want to mint a token and say, I want to sell to everyone in the world. You don't. You let the people who have the license, who know under what jurisdiction their license, how their license, you let them to form their investment club, right? Licensed people, institutions. They can bring in external auditors, trust, law firms. They kind of form their virtual private network on any permissionless network. That problem will be solved in that way.
Yeah, essentially what you're explaining is that private infrastructure is not necessary as long as you have the tools to build a form of a whitelisting on a public infrastructure.
You use software to solve the hardware problem.
Yeah, exactly. I mean, this is what has been going on in most of the chain. This is a good thing. You were adding something.
Yeah, I'm just going to add one sentence here. So the permissionless chain I have been seeing institutions using so far has been a lot on the Hendara chain, like HBA. So the reason for that is the KYC compatibility feature of it. It's very strong. So it's really not about permissionless or permission. It's about whether you have the KYC function there, whether you can have the whitelisting feature there. So I'm sure there will be some layer 1 public blockchain emerging that can fulfill those purpose and being very efficient.
Do you think there is a need for a new layer 1 for that? Or do you think this just be a collection of smart contracts on an existing one? Sorry, I just keep poking. I find it pretty interesting.
My one sentence answer is that with the ZKP, the current L1 is good enough. So, KYC, KYB, it all involves a lot of privacy protection, right? You literally can use ZK to have this kind of, without disclosing anything, to prove you have done, your club has integrity. That's my personal view.
Yeah, I understand. I mean, we're having actually a lot of conversation with our regulators around it. We're doing form of like a permission DeFi pools. And yeah, this is like so far we're making a lot of, I would say, a lot of inroads on this exact thing using. But again, like I think it's worth exploring all the avenues. We only have a few minutes left, so I'm going to ask only a couple questions to you guys. Is there anything in what's coming in RWA that excites you guys specifically? Like any specific topic that people might just want to know about that is exciting for you guys?
I think with the growing regulation, I think it's time for us to not work with the government, but find an alternative way to keep it decentralized, keep it peer-to-peer. I mean, although the government will try to enforce these new things, but they will never let us do what we want in the end, I think. So I think we're trying to find, for Alicia, we're trying to find a solution where we can, automate and streamline the entire process through DAO, the decentralized automation organization. So maybe that's one of the feasible ways to have a DAO and then with the RWA issuance and distribution going on moving forward. So,
All right, so sounds great. Maybe again before we go, just simple thing about RWA. Just wanna. I mean, we didn't really spend time introducing because I really didn't want this panel to turn into something that allows everybody to shield their own projects. But just so you know, you should check those guys on Twitter, on any platform they have. We checked that before. We were having a very deep conversation right before, and just I can ensure that, as you could just see in the last half hour, those people know what they're talking about. And again, like if you want to learn more about any tokenization thing in Korea, you can ask this guy there. You can ask Kim. Can ask Tony about everything Hong Kong. Again, like this panel, we try to provide you with as much information as possible, but of course we could not cover all the topics. I invite you guys to reach out to any of us anytime after that. We made this easy. So yeah, thank you very much for today, and well, have a great Taipei Blockchain Week.
Thank you, Claude. Thank you, everyone.